Imagine waking up one morning and realizing the global financial system you've known your entire life is quietly shifting beneath your feet. Not through a crisis, not through a war, but through a silent technological evolution, led by a country that rarely unveils its biggest moves with noise. That's exactly what's happening right now with China's digital yuan. And while it's easy to dismiss this as another tech experiment, the truth is, this could be one of the most consequential financial changes of our generation. Not because it destroys the dollar, but because it subtly rewrites the rules everyone has been playing under for decades. Before we go deeper, if you find this kind of global financial insight valuable, give this video a like and share it. It genuinely helps more people discover what's happening behind the headlines. The rise of China's digital yuan isn't loud or confrontational. There are no fiery speeches or grand ideological framing. Instead, Beijing is doing something far more effective, building a system that simply works better for countries tired of delays, friction, uncertainty, and political vulnerability. It's a quiet revolution, one built not on slogans but on code. You see, for most of modern history, international payments have relied on a long chain of Western-controlled intermediaries. Swift messages bouncing across jurisdictions, correspondent banks taking their cut, and settlement delays stretching from days to weeks. It was the best system available, but it was slow, expensive, and not immune to politics. China's digital yuan cuts straight through all of that. Transactions settle in seconds. No Swift. No correspondent banks. No detours through New York or London. Just direct sovereign-to-sovereign settlement. And this isn't theoretical. It's happening right now with partners in Southeast Asia and the Middle East. What Beijing has built is the first functioning alternative to Western financial rails. Instant, digital, and globally interoperable. But here's the key point. Countries aren't drawn to the digital yuan because they want to choose sides. They're drawn to it because it's practical, faster, cheaper, less vulnerable. And for nations trading heavily with China, the world's largest trading partner, there's a natural incentive to use the system that gives them more certainty and fewer headaches. In the beginning, China kept the platform mostly internal, used by government agencies and major state banks. But that era is over. New licenses now allow commercial firms to help ordinary businesses settle cross-border payments in digital yuan. Suddenly, it's not just governments using it, it's exporters, manufacturers, energy firms, and logistics companies. The plumbing of global commerce is quietly being rewired. And this brings us to the geopolitical heart of the story. For decades, the dollar's strength hasn't just come from America's economy. It has come from owning the rails. Control the rails, and you control the flow of money. Freeze accounts. Block transactions. Pressure corporations. Influence entire regions. It was powerful, until it started being used too often. One of the best examples of this shift is Russia. When Moscow was hit with unprecedented sanctions after invading Ukraine, cut from SWIFT, reserves frozen, banks locked out of dollar and euro channels, it became the biggest real-world test case for what happens when a major economy is unplugged from the Western financial system. The answer wasn't theoretical, it was urgent. Russia turned to the digital yuan, not out of ideological love for China, but because it had no other functioning option. Today, Russian institutions are training businesses to use digital yuan payment tools. Major companies are opening accounts in Chinese banks. Accounting systems are being reworked to adapt to this new flow of funds. This isn't symbolic, it's structural. And while Russia is developing its own digital ruble, the technology is still maturing. For now, the digital yuan is the more reliable lifeline, letting Russian energy, commodities, and industrial goods move without touching Western-controlled infrastructure. But Russia is not alone. Nations across Asia, Africa, Latin America, and the Middle East watched what happened to Russia's reserves. They saw a G20 country wake up one morning and find its national savings frozen. The message was crystal clear. If it can happen once, it can happen again. That moment shook global trust, not in America's economic strength, but in the neutrality of its financial power. And trust is the foundation of any global currency system. If you're watching this and thinking, I wonder how people in other countries feel about this shift, let me know in the comments. I'd love to hear your perspective, especially if you work in finance, trade, or policy. Back to the story. The erosion of trust is only one driver. The other is technology. The dollar's dominance was built in an analog world, but we now live in a digital era defined by instant settlement, programmable money, and interoperable ledgers. China was simply the first major economy to turn a digital central bank currency into a real-world cross-border tool. The European Central Bank is exploring a digital euro. India's digital rupee is expanding. Gulf states are testing blockchain settlement for energy exports. This doesn't mean the dollar is collapsing. Far from it. The US still has unmatched capital markets and global confidence. But we're moving from a world with one financial center to a world with several. Not because countries hate the US, but because they want resilience. They want options. They want to avoid being financially cornered if geopolitical winds shift. Think of it like energy diversification. No country wants to rely on one supplier, especially in turbulent times. But there's a deeper and more uncomfortable question at play. Has the United States leaned too heavily on the dollar as an instrument of pressure? Sanctions, asset freezes, swift expulsions. These tools can be justified in certain situations, but their frequent use has consequences. When the world sees finance used as a weapon, even for legitimate reasons, the natural reaction is to search for safety. And that's exactly the gap China stepped into. Not with ideology, not with down with the West messaging, but with a system that promises insulation from political interference. That's the genius behind the digital yuan's global appeal. It sells security, not alignment. Now, here's the big political question people often ask. Can any American president, especially someone like Donald Trump, reverse this trend? The honest answer is not really. They can slow it, influence it, but they can't stop it. Why? Because this shift is driven by long-term forces no president controls. The digitalization of money, the rise of multiple regional powers, the loss of global trust in unilateral financial decisions. Even if Trump reduced sanctions, stabilized markets, and improved relations with trading partners, the world has already learned the lesson. Relying solely on one financial power carries risk. The future isn't anti-American, it's post-unipolar. The dollar will still be hugely important, but it will share the stage with digital currencies and regional systems. The question is whether the US adapts to this new landscape or resists it and risks pushing countries further away. As we approach the end, let's step back and see the bigger picture. The story of the digital yuan is not about China defeating America or uprooting the dollar. It's about nations seeking stability in a world that's become unpredictable. It's about technology reshaping systems that were built decades before smartphones existed. And it's about a quiet global shift where countries want options, not dependencies. The financial world ahead will be more diverse, more digital, and more decentralized. The digital yuan is simply the first major step into that future. If you made it this far, thank you for staying with me through this deep dive. Don't forget to like, subscribe, and ring the notification bell so you never miss an episode. And truly, thanks for watching.